Investors Take. Who will be the next unicorn?
Okay, so investors take, who will be the next unicorn? I mean, a unicorn is just $1 billion. That should be easy, right?
Yeah, that's
not a big deal anymore. I think we're talking about trillion-dollar companies. But before we even get into that, as usual, please introduce yourself, meaning who are you, where are you from, what are you up to? Sir.
Hello, my name is Mariusz. I'm from Google. I'm from Poland. I work with top clients of Google in the Central Eastern Europe, in the iGaming space, which is for us all countries between Russia and Baltic, Germany, Baltic Mediterranean Sea. I used to work a lot with the startup teams at Google, and then personally I'm angel investor in quite a few projects, especially from the mobile space.
Actually, round of applause for every speaker.
Yep.
Right.
Thank you. I'm Vinícius. I'm the investment partner for Ikigai Ventures and Sigma. Prior to joining Sigma, I've worked in VCs in Brazil and Spain. Was also a venture partner at Atomico, and prior to that, a career in financial markets, mainly private equity investment banking. And also I founded and sold for a small amount 2 startups as well.
Hi, Mikko Puhakka from Finland originally, but nowadays based out of Gozo, which is the next island over from here, so part of the Maldives Islands. I work with both startups as well as with investors, so I have several hats on at all times. Unfortunately, I've only been involved in building one unicorn, and it's been a while.
Only one?
Only one. So
what have you been doing with your life?
I know, that's what I'm thinking. So like that was like deeply involved. So company called MySQL, got in at 7.5 million valuation, exited at 1 billion. But like said, it's been a while, so I guess I'm due for another one. So I'm hoping to learn it.
I think 2025 is your year.
I'm hoping so.
It's going to happen. Big round of applause. May you all have your own personal unicorn this year, okay? All right, now let me start with you. So again, like every other panel, I ask the panelists to feed me questions. So you posed the question whether or not the odds are higher or lower than previously of finding a unicorn, of founding a unicorn. I think underneath that there's a question of, is the concept still relevant? And what's the import of it now? So giving me the 2025 perspective, are we still unicorn hunting? And are they endangered?
I think it's very broad perspective, yeah. But what is happening is that in general, it depends on how risk you are, how risk averse you are, yeah. Because I think now the projects can be divided in 2 parts. The first ones that are maybe you are not looking for the new unicorn. You are building the next company that will be like maybe 50, maybe 20 million, maybe 100 million. Something that people kind of know already, just you doing that better, and then that's usually much less risky business. Versus you are doing the next big thing, which is okay. You are creating the really next new unicorn. But the thing is that in that unicorn approach, usually the types of funding you need to is totally different. Yeah, you need to have much more funding because on one side the AI is actually making much easier, for example, to create the stuff that used to require a lot of people, a lot of teams. But on the other side, if you look at over the last few years, the entry barrier into tech really increased. So it's not the case when you created a nice new idea, nice PowerPoint idea, and someone look at that, oh, that will be something taking off. Yeah, now actually, ideas are cheap. The execution of it and making from A to B and then to Z is much harder. So which means that finally, from the probability perspective, is higher, but it's way more risky to actually find or build a new unicorn. So that's why I think in those ecosystems or like those types of countries where are in general less risk averse, I think which are giving more freedom and more time to build something, the kind of next big thing. I think they are building more unicorns than those ones that are not. So for example, I'm coming from the C region, from Poland, where like the economy is growing very well, but it's extremely hard to find the capital for risky and next new big thing. The people prefer more like less risky, more like the nice company that will have nice EBITDA in the next like 3-5 years. And then I think creates that finally you have a lot of middle-sized and good businesses, but you have very little number of unicorns finally.
I'm a little surprised to hear that, because when I think about that level of conservatism with investment, France and Germany and maybe
of course, if you, depending who you want to compare it, yes, of course, if you compare it to Germany and France, like Poland or like C region will be quite high, yeah, but of course, if you compare it with investors from Dubai, investors from Israel, investors from US, it's totally different perspective, yes, depending who you want to compare it to, and again, I'm comparing it to the first week, where again, it's not the accident that most of the unicorns coming are from US or, for example, from China, because again, on one side there is much more capital, but on the other side, a lot of that capital is much less risk-averse than, for example, in Europe.
So let me put to you, you are a VC. You have a history of some exits. Is the unicorn concept, I'm asking very high level, but I think it's relevant because it's important to frame the inquiry. Is the unicorn concept relevant? Is it what you're aiming for? Does it matter?
Look, being very honest, no.
Please.
No.
Finally.
Okay, no.
Tell me some truth, man.
Look, because it's a numbers game in the end of the day, and it's also a luck game in the end of the day. It's not all companies that will have this exit, this kind of exit, and we are well aware of it. What I think everyone is looking for, or should be looking for, are very oiled up companies, oiled up teams that they might have a perspective of growing big. But it's not something that in every single project I'm actually, okay, this is going to be a unicorn, I'm 100% sure. No, it's more like, okay, I do believe in this business idea, I do believe in the founders. I'm backing this, especially from a very early stage as we invest. And let's see what's going to happen. That's basically the whole concept.
I think it's a relevant thing, but it's not relevant as well. So it's relevant in the sense that it's a good target to have, like, good big ambition, growing a company. But I think the more relevant thing is building a successful business that's like scaling up really fast, and so which is sustainable. Now then, the market conditions will determine whether it's a unicorn. So you make the end number count. So you might have like an average business in a very kind of a bullish, aggressive growth market that you can get an exit for $1 billion that on a bear market you wouldn't. So then it's like a matter of the owners looking as to what is the right time to make an exit. So whether it's in the growth stage, even when you don't really have the numbers to have a sustainable business, or maybe you just want to have to stick around for extra few years and hold on to it.
But maybe to add something,
sure.
I think even the data shows in some way that this concept of unicorn is a bit less relevant, because a lot of that funding moved to the early stage, yeah, which means that finally, like multiple matters, yeah. So that's why, like investors to really like, for example, to invest at the early stage, because finally, if you are aiming at 10, 20x, or you are doing that from the smaller base, finally, you don't need to build the next unicorn. You need to create quite healthy, kind of average size the company to have really nice ROI from that transaction. And
if I may add also something here, is that we're thinking of startups, especially the ones that haven't really exited or anything like that. You're thinking of a private investor game. You see a lot of companies that raised a lot of money and there are like insane valuations and they go belly up. Or when they go actually hitting the public market and you realize, yeah, it was a unicorn in the private market.
But no one really cares.
No one really cares, exactly.
Sorry, go ahead.
Just to add up, like one memory from the MySQL times, we actually got an offer when it was valued at 300 mil. So someone wanted to buy up the whole company 300 mil, and our LPs said, sell, sell, sell. We're going to sue you if you don't sell, and we were begging it. Look at their numbers, look at the growth, how they are doing so well. Hold on, just for like 1 or 2 more years. They did, and we got the $1 billion cash exit. No one thanked.
No one thank you?
No. None of the LPs. They were like, oh, great. This didn't turn out great.
This is like Michael Burry in The Big Short. You know? Interesting. So let me go back to your awesome questions that you gave me. So Mikko, what key skill competence, what are the key skills or competencies, let's say, that separate good companies from potential unicorns? I'm not sure I agree with the question. What do you mean?
What I mean is, it's like, obviously, when you look at companies, when you evaluate companies, are you looking at, typically you look at it like tech, or you look at the market and so forth, and then you look into internal dynamics of the company. There's a number of things you could be looking at. What I found out that what differentiates from like a company that just gets started, has a good like promise, maybe builds it up to $1 million in revenue, 10 million in revenue, and some decent valuation, to one that actually dominates. It's the ability to scale, really scale, and by scaling I mean not only in revenue, but people, financing. How do you put all of those things in harmony so that one doesn't overtake the others? I've seen many companies getting money too easily and then overspending on getting too many people on board too quickly, and they die. So how do you actually manage this scaling up and doing that? And if you look at the any decent investor's portfolio, when they are making the investments, you're probably going to say like, oh, that's a good idea. Yeah, I might put money on that. That has a good promise. But then at the end, if you look at them 5 or 10 years after, why did those 1, 2 out of the 10 or 20 become big and the others didn't? They all showed a lot of promise. And it's somehow, the only way I can explain it is ability to scale. And then it comes back to, I guess, the team that actually knows how to scale, how to put the different pieces of the puzzle together in harmony.
I think I'll comment on that. I mean, it's nice to have the first mover advantage. It means a lot. It meant a lot with Bitcoin, assuming that you would want to call that the first mover. But that only gets you so far, and I think the antidote to someone else being the first mover is blitz scaling, because they can be first, but if you end up 10 times their size, then they can be like, oh, yay, we were first, remember us? So what good does it do you?
If I may comment on that, I think also it goes as to how well the founders know strategy. Because, for instance, you mentioned blitzscaling. I agree it's one tactic. But in my conception, it's a tactic that you only should be using if there is a blue ocean market and you have to actually dominate the market. Otherwise, you won't take it. It's a winner takes all market. But if you're doing something that other players have done, that there are existing competitors and so, you putting up all this amount and all this effort in scaling in 1 year or 2, while you can have a more sustainable growth and throughout the period, okay, this is not a VC period, but throughout the period of 10, 12 years, you can build a multi-billion-dollar company. And there are several examples of that. You can say like Canvas, Qualtrics, and several others, Pipedrive, and several others that built accordingly to a more planned strategy in terms of scaling. So I think like sometimes you get too caught into this, let's move fast, and that might not be the best strategy for your business.
So I'm joining the panel. I hear you, and it's a comfortable thought, but I don't think any of us are working on anything that some 14-year-old in China isn't already working on. And just because you don't see your competition, that doesn't mean it's not there. It's almost certainly there. It's a big world. ideas are free, capital is liquid and global, I think you're never, it's not that you're alone, it's that you're in a dark room that's filled with other people, you just don't see them yet. And you have to act as if, pardon my French, they're on your ass all the time. I think the comfort of moving slow and not breaking things is over, but you can disagree.
I tend to disagree a bit. I think it depends on so many dynamics. I'll give you an example of one. If you are in a market, I'm from Brazil. If you are in a market like Brazil, 250 million people, why don't you build that market and make it like a bigger company before you take the steps of going international? And I'm from Brazil, as I said, I see a lot of companies in Brazil like, okay, I built somewhat of a market share in Brazil, I'm immediately going to Mexico, I'm immediately going to Colombia, I'm trying to go to the US, and so, I'm sorry, it's not going to work. I've seen so many, out of my investments so far, only one, called Gympass, was successful in doing this. All the others that went abroad before actually building a market share, when you have a significant market to obtain, they went belly up because they don't know what to do internationally, they don't know what to do inside their own country. So if you're in a small country, let's say I'm living in Cyprus, if you're in Cyprus, perfect. Think big. Think of scaling immediately because you don't have the market there. But if you are in the US, in China, in Brazil, and so on and so forth, there is a significant market for you to build revenue, build traction, build consumer love to your project before you go international.
But I think it's kind of the dark side of that growth. Yes, also like it's so nice to hear about those stories of success like Uber and so on and so on. But if you look at the kind of go more carefully study those successes, like very often those companies were like at least a few times almost bankrupt. Yeah, so that's I think is the case. Is like you go fast, you go, and then of course probability of the kind of potential unicorns is higher, but then like the probability of going out of the range is higher as well. Yeah, that's kind of is the story versus like the other side is like kind of I talk with a lot of funders who are saying my business is going well, but I don't want to be waking up in the middle of the night like thinking what I will do the next day because I'm thinking what I will do with my team and so on. Yeah, so I think those are like the two different perspectives. So that's why this risk averse versus not is really important, I think.
Got it, guys. We're coming down the time, so I want to get to some other questions. So, excuse me, Vinny. So, how do you assess a startup's potential to evolve from a point solution? You can explain what that means to industry redefining platform. It's kind of related to the last question.
Yeah. So there is actually a very good, let's say, callback to the last panel that I participated in terms of community. When people were talking about community, they meant...
Sorry, so what do you mean by point solution? Maybe it's intuitive, but just explain
Point solution would be something that is just used by certain specific industry, while you can branch out to be used to others and be kind of really redefining. Instead of building something just for, I don't know, maybe 2 or 3 players or 2 or 3 clients, you build something that it goes beyond the solution that you are. I think the best example that I can give you is Canva. Canva initially was designed as a designer tool. Now everyone, I use Canva all the time. I think everyone does it. Look, and going back to the point, I think, okay, we were talking about crypto, so Telegram and all the other metrics are kind of important for this. But before that community aspect of Telegram, I think you have the community aspect of your users. When your users are engaged, when they are talking about your product in an organic way, when they are sending suggestions, I think should be doing this and that. They are actively referring your project to others without actually any benefit to them. So that's the community that you want to build. It's not a community that, okay, I'll be engaged on Telegram or something like that. The community, I think, revolves around the project.
Okay, to pinpoint to your platform, I would say that you need to have enough of an impact on an industry. There used to be a definition that you need to have like 40% market share within an industry. Like for instance, like if you're aiming to be a de facto kind of a standard platform for iGaming, let's say there's like 300 companies, so you need to like actually get 120 of them as your clients. Then it would mean that there's like, you know, enough people have kind of accepted as to what you have, so that you don't have to do modifications all the time. So you don't have to do twisting this and that, but everyone's kind of expecting, okay, will you get this platform and then maybe add, but then you can use third parties for that. So then it kind of evolves from one-time solution into more of a platform thing.
Interesting. Now, Vinny, you posed the question that I'm going to give it to everyone because it's a good question. I think we'll even end on it, which is when you're evaluating potential unicorns or just when you're evaluating, I'm going to say investments or startups in general, what are some non-obvious indicators or reference points or KPIs, not something that like, oh, you know, just a common knowledge. What's your secret sauce? When you're looking at something, what are you looking at that no one else is looking at? And everyone record this and write it down. They can tell you their deepest, darkest secret. I'll start with you, though.
I'm not sure if something like that exists because, like, no, it's hard to answer those questions.
Don't dodge my question, bro.
No. I think there is like a few topics, like, how well united and engaged is the team. I think it's number one. I think, like, when I look at the companies, for example, like being very serious, like if the company has really nice ESOP plan, for example, yeah.
Has a nice what? I'm sorry.
Like ESOP, like when like some part of the shares were given to the team, for example. There is like founder, but is giving some ESOP, yeah.
Employee stock option plan.
Yeah,
okay.
exactly, yeah.
Fine.
So then you could see that instantly the people's motivation grows instantly, yeah? Because then people know, okay, it's not that if the company gets success, it's not only the founder who will buy the house and Lamborghini, but maybe I will be able to buy something as well, yeah? So that's, I think, it's really, really important point. And
here's your set of steak knives.
Hmm?
Never mind, it's Glengarry again. It's a movie reference.
Okay.
Second place, set of steak knives.
Yeah, exactly.
What is the secret sauce? Say it to everyone.
I'll
You're on
say
video.
like the two things.
Listen, you asked the question, so you have to answer it.
Because he was saying something that he actually sparked me a third aspect. So the first two I think I already mentioned. The team fit and the team knowledge of the problem that they are tackling. That goes without saying. Second, the love of your users, of your consumers at the early stage. That also goes without saying. But he mentioned something about giving stocks and so, which brings me to the third, which is like very hidden, is when high caliber people trust a very early stage project that they accept that stock options. So let's say someone that doesn't really need that, is making a fortune already, and they see it's something in that company, or they see something that found that they are willing to give away their current, let's say, health financial situation in exchange of accepting some stocks and work their ass off for that company. That's actually a very strong indication that you have something in there.
That's interesting. So let me rephrase it and let me see if I'm doing it correctly. It's a very interesting point. So other savvy participants who are already involved in the project, rather than taking something very liquid and generic, are concentrating their risk in equity or equity equivalent. That means something.
This, and also the fact that they could be working, let's say, in Google and so, but they decided to, okay, this has a future. I know this industry. I've talked to the founder. This has a future. I'm betting my let's say, career on that.
That sounds great. It also makes me think of Theranos with Elizabeth Holmes a little bit. She was aware of that social dynamic and used social proof, which is what you're basically talking about, surrounded herself with luminaries. And the halo effect of those luminaries convinced everyone, well, if George Shultz's grandson is involved, then this must be good. Yeah. And then boom. So how do you tease that out?
I'm like that. I took a bet on Ikigai because I believe in Emma's vision. I moved from Spain to Cyprus because I saw the vision. So I'm like that. When I'm sold into a project, I see a vision, I let go of things, and I dedicate myself to it. So I don't know how to mitigate that because I'm kind of this type of person, but it gives some strong indication that there is something there.
I think actually that's the best answer. We'll go over it for a second. I think when you don't base your life on that, but you use it as a data point that has relevance and is important, but isn't the whole thing, maybe that's how you deal with it. So final word.
So I'm currently looking at three kind of themes technology-wise. Big data, AI, and cybersecurity, which I see feeding each other. So I'm constantly reading up on those and seeing how different kind of opportunities emerge around those. So when I'm talking with people and companies and entrepreneurs that are saying that, okay, they have a business around those, I get interested, but they have to have good insights, something that I haven't read. You know, so I read a lot. I have one skill, which is I'm able to read and kind of understand a lot of written text extremely quickly. So I read a ton, even though I'm not a techie. So then I have a fairly good understanding as what's happening within those tech sectors. And most of the time, the people just quote you, the market is big, it's growing. I'm like, wake me up if you are done. What I want to find out that they've discovered something that I haven't heard before, and then I get really intrigued.
That makes a lot of sense, actually. Because if you're holding yourself to a high standard when it comes to bringing data into your mind and thinking about it, and you're reading, consuming widely, it's probably pleasant to come across someone or something that tells you something you don't know. You're like, oh, that's a relief. It's good to not be the smartest guy in the room, right? Okay, we're over time. Thank you. Big round of applause for our audience. For our audience, yes, and for our panel.